To my more important analysis videos on Friday, 22nd of December with me, Richard Perry, market analyst at Hantec Markets, looking at dollar yen, which has sort of stumbled a little bit in its rally. We had a good, strong run actually higher this early part of this week, but a little bit of a stalling of that rally. Just underneath, interestingly enough, just underneath that 1375 resistance of last week's high. But the market just still looks positively configured. Those MACD lines rising, having had that bull kiss, the stochastics rising, RSI just sort of, I suppose, petering out a little bit under 60, interestingly enough. But we're still sort of holding up above this pivot at 113 big figure area. And it's sort of, as I've said previously, it is a bit of a pivot range, really, rather than an absolute level. But trading above 113 figure, you're still fairly confident that the market is sort of positively configured. You can see that on the hourly chart, where you're sort of still positively configured on all the momentum indicators. There are MACD lines sort of retreated back to neutral and sort of beginning to turn up. RSI mid 40s rising. Just unwinding a little bit, so you'd be still looking at little corrections as a chance to buy, really, to put pressure on that 113.75 area. You've got 113.95 above that, and then all this sort of medium-term range resistance, 114.25 to 114.75. So I think it looks, I mean, the positioning of this market still looks as though it's going to be pushing higher. Maybe it needs sort of treasury yields on the 10-year to continue to pull higher, but it certainly looks as though the market is sort of positioned for this. Maybe a little bit of consolidation given Christmas trading, but still positioned technically positively, shall we say, to buy into weakness. 13 big figure, supportive. 13.10 on the hourly chart is a bit of a pivot. You can see 13.10 around about there, and 12.85 again, another pivot area last week or so. So I wish you good luck in your trading. I'll speak to you later.